All right. Hello, everyone. Hello, Felix. We are back for another edition of Trade Risk Live. And I have the man, Felix Bertram, back here. All things systems, portfolio construction, back testing. Felix, how are you today?
Very well. Well, thanks a lot for having me, Evan. It's great to be here.
Yeah, I like this little series that we got going on here, and we've got a few other videos that we've got planned in this pipeline. But Felix and I we've done a couple of videos now that are on Trade Risk's YouTube channel. You can certainly find them there or on our website. But we spent actually a few weeks ago, we went through kind of Monte Carlo simulations, the importance of really having confidence in the return streams and the risk and volatility that you might expect when you're selecting portfolios or trading systems. And so in this video, we're gonna kind of change things up. We're gonna set the foundation a little bit. We're gonna talk about backtesting, and we're going to talk about specifically the open source project that Felix has built, which is called TuringTrader. And we've talked about it in the past, but Felix has got a great set of slides that we're going to go through today. And, I thought it would just be helpful for the folks, to before we kick off to you, Felix, to really sort of just kind of understand maybe why we even want to backtest or simulate, market behavior in the past. And, when we're thinking about backtesting, right, this terminology that systems traders use, and I would encourage, even if you're a discretionary trader out there, if you're a technical trader, especially if you're a technical trader, is to really test your assumptions. I think that's the beauty and, real kind of wow factor of backtesting. It's not a holy grail. There's lots of pitfalls. We're not going to get into that necessarily, but you really want to be able to evaluate and observe past historic market behavior, right? And so if you're a discretionary trader that is making decisions, in real time, it's going to take a lot of time for you to get enough samples and trades and occurrences in. Whereas if you can write some code, if you can automate some things, and if you can sort of look at 10, 20, 30 years of how this particular rule set would have performed, you get you get caught up really quick, right? And you can test those assumptions. You can test things that you are thinking about rather than, observing markets in real time and sort of kind of penciling it down. And so, I mean, that's the beauty. That's backtesting. That's what we aim to do. It's, again, there's pitfalls, there's curve fitting, there's do's and don'ts of this process, which is a whole nother discussion. But I think what Felix is going to share today is, a lot of the careful considerations you then need to make on choosing the right project or environment or structure to backtest in, right? There's lots of different software applications out there. We're going to talk about a few of them today, but we're going to focus on TuringTrader because that's obviously, what we have is our use case and what Felix has built. So a little bit of rambling there. I mean, any other, from your perspective, Felix, I mean, just for the.
No, I think that was a great introduction. This was a great summary, very helpful.
Okay.
And well, if you're okay with that, then we can jump right in.
Yeah, let's do it. Let's kick things off here.
So I prepared some slides. So let me see how I can share this.
So you share. I'll put it up there for folks in the chat.
Screen is probably okay. Let's do that, and then let's.
Gotcha. Yep, I see it up here now.
Let's do this.
So real quick before you start, Felix, for folks, if you have questions, absolutely leave questions. We'd love to hear them, love to take them. So as we move along here, please leave any questions you have in the chat. And for folks that are watching this after the fact as a recorded video, check the description. We've got links and we'll have timestamps so you can jump to different parts of this video to what you see fit. So yeah, take it away, Felix.
All right, cool. Well, today I want to talk about TuringTrader. That's the backtesting engine that I use every single day, basically. And well, as the subtitle already says, yet another backtesting engine. So why do we need yet another backtesting engine? What's different? What's wrong with what's out there? And then there will be a bit of demo. So let's jump right in. Before we do that, a quick disclaimer. So this is for informational purposes only. This is not financial advice. And everything that we do with backtesting is basically extrapolating past performance into the future. And well, this is not necessarily a valid approach. Good. With that out of the way, I want to have a quick look at available backtesters. I want to talk about why TuringTrader is different. We're going to have a live demo and hopefully at the end, at the latest, some questions, but feel free to interrupt. Good. So let's jump in. So there's a bunch of backtesters out there, and there's some for free. And for free, for example, a product that I like and that is kind of quirky is Zorro. If you don't know it, it's worth having a look at it. It has a lot of interesting ideas in there. For example, how they deal with parameters that you want to optimize later on, how the optimizer is part of the whole development process. So it's an interesting and useful tool, actually. And then there's a number of open source projects out there. There's Lean, which is the engine that is used by Quant Connect. Very powerful engine, mostly cloud-based. It can be run locally with some limitations. There's Zipline, which is a Python-based engine that was developed for Quantopian and is still around. There's Backtrader, another Python-based one, which I actually have not used personally. And then there's a bunch of commercial tools. There's NinjaTrader, which is actually free until you start live trading. There's Multicharts, which you have to pay for, and which is relatively expensive. And there's AmiBroker, which also is commercial, but is relatively cheap. So Multicharts runs around $1,000 to $1,500. AmiBroker runs around $300. So wide range. Now, the roots of most of these platforms are in interactive trading. So they started by having a platform that can create charts for you. And then they added some live trading features. So basically, you watch the chart, and then you say, here's where I want to enter a trade, and here's where I want to exit the trade. So this is where many of these tools came from. And then at some point, they added automation features to this. And so you could run indicators, and you could maybe create custom indicators, and you could run strategies on there and basically custom rules to enter and exit trades. And this is basically an approach where you're looking at your account and everything you do is in the here and now. And that is not necessarily the best starting point for backtesting, where we're much more interested in many, many years of history. And if you really want to do R&D, you need a different approach, in my opinion. And we'll have a look at why that is and what that means. So TuringTrader, that's the engine that I developed. So the V1 engine, I started in 2018. And originally, I designed this to trade options. And when I first started with the project, it was actually a plugin for multi-charts. And by the time I was ready, I had replaced pretty much all of the functionality from multi-charts, with the exception of creating the charts and metrics, at which point it became clear, well, we don't need multi-charts for that. We can handle this all. So this is why it became a standalone product. And I have it in live trading every single day, and it has proven to work well. It has taken a different approach on many things, and yet what I found over the years is that I didn't go far enough. That I still did stay too close to where others had already been, and that it's been still limiting to what I could test and what I could develop and what I could research. So that's why I started the V2 engine. So this is really a new part. I started designing this in 2022, and I just released the first publicly available version of that in the past few days. And everything that I did there is basically reflecting on more than 300 algorithms that I've developed on the V1 engine. So I have a pretty broad background on what works and what doesn't work for all sorts of different algorithms. Momentum-based, trend-based, mean reversion, mean variance optimization. And I've tried so many different things, and have a pretty good understanding of what that means when you start coding this up for both for multi-charts and for the V1 engine, that I really wanted to fix some things there. The engine is highly opinionated, so there is a chance that you disagree with the choices that are made. But nonetheless, I believe that these are helpful and necessary, and I'm starting to migrate my code base to this now, and I'm expecting a full release within the next month or so, but for those curious enough, there is a binary distribution available on TuringTrader.org.
So just to give some context here, I mean, for folks, and just to kind of recap everything Felix said, I mean, it's exciting because essentially what we're going to be talking about today is an overhaul to the TuringTrader platform. And as Felix mentioned, it's been in production. He's been using it. Traders have been using it. I've been back testing with it for years. And so that old engine has existed. It's been battle tested, but we have kind of a new rich kind of feature set that has a whole slew of let's say, better design choices, which Felix is about to go through. And these are all things, again, for you folks that maybe haven't got started backtesting yet, or you're deciding between software. If everything seems confusing, we're going to start to narrow it down here on just TuringTrader as a potential solution for you. So yeah, take it away, Felix.
Yeah. Well, the first part really is about being productive. So ultimately, I'm in the business of developing strategies. So ultimately, I need a tool that doesn't limit me, where I can develop things fast, where I can test ideas quickly, where I get answers quickly. So being productive is really key to what I do. And the first part to being productive is really the ease of coding. And that means there must be a modern programming language. So that supports code modules, that supports proper data structures, including lists and dictionaries and hash tables and stuff like that, and has complex features for sorting and filtering data. That is especially important when you're dealing with portfolios and multiple assets and want to find out which asset is the most promising one to choose. And TuringTrader uses C# for that, which has a lot of these features that are very, very helpful. And I would strongly discourage the use of any fantasy language with anything like easy or simple or whatever in the name. These custom languages typically do not support complex data structures. And there's so many drawbacks of these languages, and there's no reason not to use something real. And now the question might be whether C++ or C#, and I chose C# because C# actually solves a lot of the issues that C++ has. C++ is kind of dated, and the whole module concept and stuff is alien to C++ and built into C#. So C# clearly is the more modern and easier to use language. Now, the next part is simple and concise APIs. And so there's a lot of things that are surprisingly complicated when you use other tools. And one of this is instantiating indicators, and especially when it comes to running indicators on top of other indicators and stuff like that. All of these things should be simple, because if they're simple to do, you can focus on other things and you can build more complex stuff, and you can spend more time thinking about what you want to do instead of figuring out how you do what you have in mind. And that also means that you need professional development tools. So professional development tools really means that you have a proper IDE that has proper syntax coloring, and where you can see which references you have and all these things. And the absence of professional tools to write your code, it just makes things take longer and is error prone. So we should try and avoid that. Now, the next part is TuringTrader is really focused on portfolio management. And portfolio management is something where basically you're trying to decide between multiple assets, which one to pick, and how much to allocate to each asset. And that is something that these commercial platforms do surprisingly poorly. So with NinjaTrader or with multi-charts and also with AmiBroker, these things are incredibly painful to do. And you need to do a lot of things that you shouldn't be doing just to make that work. And so TuringTrader is really focused on multi-asset strategies. And it follows an allocation-based paradigm where we distancing ourselves a little bit from the actual trading account. So we're no longer thinking about dollars and shares. We're thinking about allocations, 15% to this and 50% to that, which makes things easier to handle. When you're thinking about simulating something over several decades. And one important part to that is scaling positions. So pretty much all of my algorithms actually scale in and out of positions instead of just buying or selling. And this, again, is something that is surprisingly painful with other backtesters and very, very easy to do with TuringTrader. And the next part that really is important here is dealing with complexity. And you might start out with something that is simple and easy, but the further you go, you will find that the stuff that you have in mind is getting more and more complicated. And now the question is, how does your backtesting engine support you in dealing with this complexity? And there are some aspects to this. One is, for example, dealing with universes. So how difficult is it to create a strategy that trades all members of the S&P 500 historically and today? And you'll find that many tools actually have issues with that. It's a simple task, and yet you'll find that many tools don't support this at all. Indicators, I already talked about. How difficult is it to run indicators on 500 instruments from the S&P 500? How many lines of code do you need for this? And how does this look like? Can you actually still read that code? And one of the really wonderful features of TuringTrader that helps with all of this a lot is TuringTrader allows you to do hierarchical development, which none of the other tools really does. And what this means is you can develop a strategy, and you can then bring the strategy into another strategy as an asset. So for example, you can have a strategy that that trades stocks, and you use bonds as a safe instrument. And you start developing with just a simple bond ETF for that. And then later on, you can decide, well, this bond ETF is no longer good enough. I want a managed bond strategy instead. And with TuringTrader, you don't have to change anything in your code. You basically bring in this managed bond strategy just like an asset, and then you can trade it and you can allocate to that. And that way you can keep your code clean. You can focus on what your strategy really does and keep out the things that a different strategy does. And that makes it much, much easier to sort your thoughts and to deal with this complexity. And now you can stack all these things on top of each other. And one of the things that we're doing on TuringTrader.com is we're building these all-stars portfolios, which are typically a combination of 3 or more strategies into a meta portfolio. And this is all stuff that is incredibly easy to do with TuringTrader and surprisingly complicated with other tools. And the last part that is important for productive development is insight. So you want to know what's going on when you're developing. You want to figure out, why is this working or why is this not working? And one of the things that's important here is you need to have detailed standard reports, like an equity chart, an underwater chart, and metrics and stuff like that. But TuringTrader goes a little further, and we're going to see that later on. But you also want to be able to create custom charts. This is actually important. It's not just for making things pretty. It's actually to help understand what's going on. For example, many momentum strategies struggle because the momentum signal is noisy. So you want to visualize that. And just being able to print a number into the console is not going to show you that. You want to have a chart for this. And really the last part is a fast simulation. And for the TuringTrader V2 engine, we made actually some changes that make it possible to calculate a lot of these things in separate threads, so that TuringTrader can actually multi-thread your backtest, which really pays off when you're having many instruments and many indicators.
So yeah, I mean, what's cool about I mean, I think everything that you mentioned here is, so it does require maybe someone to have gotten started using some other engines to really appreciate a lot of what Felix just went through. And so, and by the way, we should, just make it clear, right? For folks that are hearing TuringTrader backtesting engines for the first time, we're not selling anything here, right? This is an open source, free to use backtesting engine. So there's no dollars, there's no commercial price tag on any of this. This is an open source project that anybody can use. But to kind of just piggyback a little, just two small examples that Felix talked about just then on that slide, the fact of like rich reporting, right? To be able to see a nice, rich set of performance metrics and trading systems portfolio metrics is something that is built in and customizable in TuringTrader. For those of you who may have watched our YouTube series called Beyond the Charts, where I did a handful of experiments in backtesting in NinjaTrader. Now, I love NinjaTrader. They're good folks over there. I've used their platform for a while, but they are very limited. And what you actually see if you watch those videos, they're on our YouTube channel. I have to run the tests in NinjaTrader, and then I have to get that output exported into Microsoft Excel to then calculate the performance metrics that I'm interested in because it lacks in the platform itself, right? So this is a small example, but a real example of prior content that I have on the YouTube channel. And just one other small part is a huge one, right? And again, not to go into the pitfalls of backtesting, but as Felix points out, the historical constituents and the data source when you're backtesting, right? So for instance, a lot of folks will like Felix pointed out, the S&P 500, 500, there could be 502 stocks, but there's about 500 stocks in there right now. And the stocks that are in there right now were not the same stocks that were in there even 4 years ago, right? There's constant changes. But for folks that take just the S&P 500 today and then test it on 30 years of data, they're not picking up all the companies that got delisted. There's a lot of bias inherent in, not back testing that. And that comes down to data sources too. But the point is these are things that you start to that are big pain points and can really cause you some headaches when you're back testing in other platforms, let's call it. So I just want to add that in there. But yeah, nice work, Felix, on that.
Absolutely. So data really is central to backtesting, right? We want to make the most of the data that we have and get new insights, what works and what doesn't work. So we need high quality data feeds. And TuringTrader supports Norgate, and I'm really a big fan of Norgate. They have really good data, and they have a slightly different scheme that I really, really appreciate than other data vendors. So the idea behind Norgate is that they have a big database of quotes, and they have a tool that mirrors that database on your local machine. So whenever they make a change on their database, it reflects on your machine. And that is important when you're thinking about what happens when a company issues a dividend, for example, or when there's a stock split or something like that. Many tools actually have this idea that I have a database, a local database, and I just append to this database the quotes from the last few days since I last updated. The problem is that this scheme is inherently wrong. Because when we're trying to do technical analysis, then we're interested in fully justified data. So we want to make sure that all the stock splits, all the dividends are included in the price. And to do that, we need to back adjust. So a dividend was paid today. That doesn't change today's price. That changes yesterday's price and the price a year ago. So you need to purge all the old data and overwrite them with newly back adjusted data. But if the tools like NinjaTrader and Multichart don't support that paradigm, this becomes a real burden. Suddenly you're spending hours every week on grooming your data, and you shouldn't be doing that. With Norgate, you don't have to. So that's why I'm really a big fan of what they've done there. But that's a source that you have to pay for. But there's also free sources. Tingo, for example, is an excellent source. They have very generous limits and they're free. All you need to do is create an account with them. And another data source that is supported out of the box is FRED. So this is the Federal Reserve. And for any strategy that tries to bring in macroeconomic indicators, FRED is really a trove of data that you can just get for free. There's so many interesting things: unemployment numbers, exchange rates, Case-Shiller housing prices, you name it. Everything is basically there. Everything you ever wanted to know about the US economy you can find, and actually about the international indicators as well. And if that's not enough, it's very easy to bring in your custom data, which again should be something that we shouldn't have to talk about. But for example, Multicharts charges you $10,000 for the SDK to bring in custom data, just to get an idea of why this is a point that's worth talking about. But data are not the end of it. There's more that you need to do with data. So one of the things that's incredibly useful, and again, not covered in any engine that I'm aware of, is specific features to backfill data. So when we're developing algorithms, we typically want to backtest them at least until 2007, so that we have the full length of the 2008 recession in there and have an idea of what the algorithm does in recessions. But it would be better to backtest back to 2000 or even 1990 or even further if we can. The problem is that many of the assets that we would like to include in our strategy today didn't exist then. So the question is, what do you do now? And a lot of ETFs have been launched in the early 2000s and even 2010. So you don't have that much data. So what you can do to do this is you can stitch them together with other data. And first you can go to mutual funds and squeeze a few more years out of that. And then you can use indices to substitute these ETFs, use these indices as a proxy. And TuringTrader has features to splice your data together and to join your data together with proxies, so that you can simulate the performance of a bond trading strategy back to 1970 or something like that, which takes a lot of time. If you have to try and figure out how to do this yourself, you will find that it's a lot of work to do these things. And with TuringTrader, you just get it for free. And many of these backfills that we use, for example, for our bond ETFs, are actually included with the distribution. So you can see what TLT would have done in the early 1970s up to the peak in interest rates in the early 80s.
And so, Felix, when you mention that the splicing and the joining feature, how it's built in, so this is something where basically, yeah, I think that'd be a good example. If we're working with bonds, for instance, or it actually doesn't really matter, but you're defining that in TuringTrader, right? You can basically define, oh, I want to use, or let's say you're using like a bond fund, I want to use the TLT, but then you can actually have like a backup mutual fund, right? That's going to sit behind it. That's going to essentially be the earlier data set. So is that kind of how it works in TuringTrader? Is you kind of plug in the multiple data sources for one asset?
Yes, and then the real feature behind that is that you don't have to think about when the switch over occurs and what scaling factor you have to apply when you're going from one asset to another. From the perspective of your algorithm, it looks as if the data existed many years before.
Yeah, that's awesome. Yep, very cool, very cool.
And then there's another thing. When you start mixing and matching data, when you're starting to bring in data from multiple sources, what you will find is that in many backtesting engines, this creates issues. And that is mostly because of the timestamps. And you see, for example, when you're looking at a gold ETF, you might want to backfill that by using the gold fixing price from the London exchange. Now you're in a different country, you're in a different time zone, you're following different holiday calendar. And when you just bring in these data, you have issues that you suddenly might be injecting new trading dates into a simulation, which screws up indicators and stuff like that. And this is, for example, with multi-chart, something that is extremely painful to debug and deal with. And well, that's why TuringTrader considers the trading calendar an integral part of data. So all data that are brought in are first resampled to the trading calendar, so that really we're only following the calendar that is relevant to us. And for most of us, this will be the US trading calendar, but you can replace it with other calendars as well.
What about, I know we're doing a lot here with equity markets, bond markets, and traditional assets, but in terms of in cryptocurrency, right? What if would this kind of work in the sense of if we want to use Bitcoin, let's say Bitcoin daily pricing, right? And we want to use Coinbase for as long as they're around, but then there's some other exchanges that existed beforehand. I don't know if Tingo has them, so I'm actually not 100% sure if Tingo has them themselves, but anything with crypto in terms of splicing, joining?
Well, the splicing and joining is not affected by that. For the trading calendar, you would probably want to change that to basically make it 24/7, which is easy to do. Crypto data, right now you would need to bring them in as custom data. It's easy to do, but I guess I will be working on a little example that shows how to do this.
Awesome.
So this will come later as part of the support packages when we fully roll out the V2 engine and work on all the documentation. Crypto is something that I've been asked before. I personally don't trade crypto, but you're right. We should support that and at least provide a little example how to do that.
Cool. Awesome.
Good. And then there's reliable operations. So really what we want to do is we want to reduce the number of errors that might happen. And the first part here that many might not realize is you really, really want to use a language that is compiled. You don't want to use a language that's interpreted. And why is that? The reason is you want to find issues before you're running your code. And honestly, when you're coding in Python, I find it a terrible idea when I have some little code there that deals with an edge case that first I have to run my code for several days or whatever until I hit that edge case just to find out that there's a bug there and my code crashes. That shouldn't be happening because a lot of these errors can be found during compile time. So that's where a compiler really adds value. And yes, it might look like a steeper learning curve, but honestly, especially for those who are not as good in coding, I find the additional scrutiny that a compiler puts on your code actually helpful and not limiting. So that gives you a little bit of an idea where I stand on Python and why I personally don't develop with Python. And well, we're coming back to a professional development environment. And one of the features that you really, really want in developing is a debugger. Software development, and this is software development, without a debugger is always going to be a toy. So if you're serious about developing strategies, complex strategies, you need to have proper tools, and that includes a debugger, and that rules out quite a lot of the tools out there that do not support integration with a real debugger. And that also rules out pretty much all of these fantasy languages that have been invented to support these trading platforms. And another thing, revision control. So you really want to step up your game and put things into Git or whatever revision control you might want to choose so that you keep track of the changes that you make over time. And that means you want to have good tools. You want to have tools that support you with all of that. And well, then there's automation. And what's different about TuringTrader is TuringTrader, the simulation engine is detached from the UI, and you can very easily integrate the simulation engine in your custom applications. And so you can build custom applications that use TuringTrader for whatever purposes, whatever they need to do. And this is, again, something that is surprisingly complicated. For some years, I tried to have a server that starts up in the morning, fires up multi-charts, and then starts running a strategy to automatically trade that. And multi-charts doesn't support you, so you have to use some third-party tools that emulate mouse clicks to get this all started. And this was so unreliable. This was such a terrible idea. So if you want to do anything like this, well, you want to make sure that your engine can actually do this. And I have two use cases for this. So one is the TuringTrader.com website, which tracks by now something on the order of 70 algorithms, if you include some of those that are not visible to everybody. And well, this is a fully automated process that uses the TuringTrader engine to calculate all these and create these reports and update the website. And then there's also the business that I do for my clients, where I'm managing client accounts. And again, there's a custom application that helps me with the work of rebalancing client accounts. And so if anything that is more than just running things is on your mind, then probably you want to make sure that you have an engine that supports you with that. And custom reports are actually an important part. And Evan mentioned that earlier, that for one of these streams, he had to create some custom reports, and it wasn't easy. Well, there's always going to be a chart that is different than what the engine supports, and you should have a way to create that. So TuringTrader supports you with lots of this. And now one of the questions is quality. So you want to have a tool that you can rely on, right? And well, all I can say here is TuringTrader is not a toy for me. For me, it's a professional tool. This is the tool that I make a living off ultimately. And I'm using it for my daily strategy development. So if there's annoying bugs, you can be reasonably certain that I'm aware that they exist and that I have an interest in fixing them just for my own sanity. And I'm using it for daily trading operations. So I'm placing thousands of trades every year for myself and for clients, and TuringTrader is at the core of that. And that gives you a little bit of an idea how much I depend on this tool to work, which is hopefully good enough for you to depend on it as well. It is fully documented. So a problem with lots of tools and frameworks is that there's documentation missing. For the V2 engine, there's not enough yet. So we're working on the background articles, basically the starters that show you, hey, do this, do that to get started before you jump into the API documentation. So that will hopefully get significantly better in the next 3 or 4 weeks. We're working on it. It's been, I think, on a pretty good level for the V1 engine, and the V2 engine will be no different. And well, I'm actually using stringent unit tests to test all these features, and before every release I run these tests to see that it didn't break anything else. So I think it's a pretty solid tool. Good. So this brings us to the question of who is this really for? And there's some requirements. If you want to enjoy TuringTrader, well, you need to have some coding skills. And that might be something that you see as a deterrent. And I would encourage you to think about this in a slightly different way. There's a lot of tools that promise you that you don't need to be able to code, that everything is just point and click. Or there's tools that promise you that coding would be so easy and simple because they have taken out all the complexity. And in my experience, this is a myth. If you want to create technical strategies, ultimately you need to be able to code. And there is no talking around it. Coding does come with complexities. And if you don't know about data structures and standard algorithms, you will have a hard time no matter what. The only difference between a professional tool and a tool that carries simple somewhere in its name is that the moment you come and want to do something that's more complex, you will find that these things are incredibly complicated with a simple tool. So yes, the learning curve initially might be a little easier, but later on, there is a high likelihood that you might regret going the easy path.
Yeah, I mean, such in life, right? You kind of get what you pay for in terms of the easy click and drag and drop sort of engines that you see out there. Don't get me wrong, I think they have their place. I think they're great. In fact, I may even still use some of them to this day just to do a quick test of an idea. If I want something super quick, couple of clicks, and I know what I'm, need to look for, I might use something like that. But when it's time to kind of get serious and really kind of understand all the things we've been talking about here, or Felix has been mentioning, the data sources, the structure, like understanding really kind of how everything is working and being able to track fills and have more professional reporting, you have to kind of take the leap. And I think what's at least good, and I don't want to jump ahead here, but I mean, Felix and I are going to be doing some, examples and code walkthroughs, and he's got documentation on the site. So you can certainly look at the structured examples that are already built out for you, and then you can kind of modify and work your way into it. So, yeah, there is a leap. There is a little bit of a leap, but again, I think it's a necessary leap. Like, it's a requirement, unfortunately. So.
Yeah, well, TuringTrader is not point and click. Absolutely not.
Nope.
And to enjoy it, you need to have some appreciation for text-based, software-centric flow. And the beauty of things that are text-based versus things that are point and click is that when you check them into revision control, you can actually see what is happening. What did I change? What did I do to go from this to that? And so there's a reason why a lot of these tools are ultimately text-based. And because now in the revision control system, you have something that shows you the history and shows you really the different stages that you went through. There are some limitations for TuringTrader. Of course there are, because I made certain choices to make it usable for the stuff that I wanted it to use for. And one of the limitations is the V2 engine is clearly targeted at end-of-day trading. You might be able to squeeze other trading periods in there, but it's not made for that. And this might appear as a big limitation. In my experience, ultimately it is not. There's still ways to have some trades execute in the middle of the day. Think of limit orders, stop orders, or something like that. For me, at least, I'm only able to do this once a day, going through all these accounts that I'm working on, and therefore this was a requirement for me. Focusing on end-of-day trading is what allows us to do these multi-threaded things, for example, which allows us to sample to the trading calendar and things like that. So it is deeply ingrained in the way how I envision TuringTrader to work. If this is really a limitation that you can't deal with, the V1 engine will continue to be around, and that has a streaming architecture and could deal with minute bars or something like that, if this is really something that you feel you need. Also, TuringTrader is a little bit removed from your account. TuringTrader really doesn't care about how many dollars are in your account. TuringTrader doesn't care about how many shares are in your account. TuringTrader thinks about things in terms of allocations, in terms of percentages. And so ultimately you're calculating an index. And so to execute that in your account, you need to map that information on your account. And that is one extra step that is required. In my opinion, this makes it much easier to backtest over several decades. And one example, for example, would be to think about an inverse leverage ETF that you use for hedging purposes. And now these ETFs lose 50% of their value every year or something. So if you want to test that for over 30 years, the dollar amount or the price of this ETF would change over several orders of magnitude, which means that you have to fund the strategy with several $1 million in the beginning so that you can actually buy enough shares to reasonably accurately approximate the allocation that you wanted to have. And these are all issues that arise from testing over long periods, where it's different from looking at just the here and now of your account. So that's why this is an important thing to do, to run longer backtests. But it is an extra step that you have to do when you want to use it for your day-to-day trading operations. And well, what kind of applications is this really shining at? Well, if you want to develop complex strategies, if it's something really simple like a moving average crossover strategy, yes, there's other tools that can do this stuff with less involvement than TuringTrader can. But when you want to have a complex strategy that blends multiple algorithms or uses a different algorithm for bear markets and stuff like that, when you want to create a hierarchy of strategies, that's where TuringTrader really shines and really makes your life much easier. When you want to research quantitative methods, because TuringTrader makes it so easy to experiment with indicators and chart indicators and from the past versus future values, so that you can check the predictive powers and stuff like that. If you want to do research like that, TuringTrader is your friend. And well, if you want to integrate trading capabilities into a custom application, and I was hinting at that before, that our website is doing something like that, that what I use for rebalancing does something like that. So there's a lot of reasons why you would integrate trading into a different application than just the tool itself. Good. So the last aspect that we need to talk about before we can go into the demo is open source software. So TuringTrader is open source. And what open source means is it is free to use. So you can download it on the website. You can use it for pretty much whatever you want, and you don't need to pay me a single dollar for that. So there's really no strings attached to your personal use. And this is all governed by AGPL 3, which is one of the standard open source licenses. And what this means is developers can develop their own algorithms without any restrictions. You can build whatever you want with this. And you can modify the engine any way you want. If you see, hey, I disagree with the way the engine does certain things, you can modify that. And you want to introduce a new trading calendar, you want to introduce a new fill model, you want to change the way how reports work, you can do all these things for your own use. But when you share your derivative work, when you distribute it, when you create a new tool that you call Bobby's Trader, and that is the same as TuringTrader, except that the colors are different, well, then you will need to disclose or share the source code and the way how you change these colors. You cannot just use my work to create your own commercial product and share it with the world. As long as you use it within your corporate network, it doesn't matter, that you don't need to share. But when you offer it for sale, when you offer it to the public, when you're distributing derivatives of my work, you will have to share the source code. And that is what AGPL tells you. And what's different between AGPL and GPL is network use is considered distribution. So if you think, hey, it's a great idea to create a cloud-based version of TuringTrader, well, you can do that. And you can even create a business out of that, but you will have to share the source code for that. Good. So this is what you need to know about open source and the rules around there. I don't think this is really a limitation. You're getting a lot for free, and so therefore I personally feel that it's only fair that when you find this work beneficial and you're reaching a level where you're distributing this to others, that you do that under the same rules that I use, that I limit myself to. But you'll be the judge. And now, well, we can jump into the live demo here.
Yeah, that sounds good. That sounds good. Yeah, I mean, it is. I mean, it's as Felix described. I mean, it's open source code, so personal use, have fun. There is no charge for it. Felix likes beer. You could always send him a few cases of beer if you get some good algorithms developed out of it. But yeah, personal use, you can certainly have fun and enjoy the code that he's put out there to the world. So,
Well, even commercial code, you can create
true.
any commercial
Yeah.
application with it. There is no limits to that.
Yeah.
It's just when you create a product that includes my code and distribute that you will need to share the source code. But if you want to develop your own ETF and want to trade that would be a commercial application, right? You don't have to share that source code.
It's true. Yep. Good point.
So it is not limiting you to personal use. The limitations arise when you redistribute my work in whole or in part.
Makes sense. Yep. Totally.
Good. So let's jump into the live demo. So can you see Visual Studio here?
Yeah, I got Visual Studio up with.
Okay, good. Yep. So, well, I was talking a lot about professional development tools, and well, everything I do with Microsoft Visual Studio, pretty much. And well, Visual Studio honestly is one of the nicest and most convenient software development environments that you will find out there, and it is free. So you just go onto the Microsoft website and you download the Visual Studio community version that does everything you can dream of. It is a fantastic tool with tons and tons of really, really great features, and it's free. So TuringTrader comes with a bunch of showcase algorithms, and these showcase algorithms are compiled into a DLL. TuringTrader can also run code directly from a source code, but I'm not looking at that today. We'll probably look at that in the next stream. So here I have a Livingston's Mama Bear or portfolio open from the book Muscular Portfolios. Doesn't matter. Let's just start TuringTrader and see what happens. So here we go. Let me just, hey, why is this still, okay, so maybe like this. No, that's not where I wanted to go.
Really want you to keep presenting that slide.
Yeah, well, first I wanted to get rid of that presentation, and somehow it doesn't. Why does it do that?
You could stop sharing and then maybe share just the code if you need to, but I'm not sure why.
Well, I guess I have to just kill this. Okay, good. Okay, good. So let's do it like this. Good. So this is TuringTrader. So it's an ugly little tool. There's really nothing to it, and you'll find that it's got a few settings here. So there's not much here, and well, if you look under the file menu, that's where things start getting a little more interesting. There's showcase algorithms, and there's a bunch of them that we have for the V1 engine, for the V2 engine. There's not that many yet. I will eventually port all of the legacy algorithms to the V2 engine. So we'll get there soon, and you could pick one. And I said, well, today we're going to look at Livingston's Muscular Portfolios. Let's take this Mama Bear, and it will load that. And then there's a little run button, and you click on this run button, and it will run the strategy, and it will eventually show you a report. And well, let's make this a little bigger. So what can we see in this report? So the first page is the equity curve, and well, here you can zoom in and out and do whatever. And pretty much everything that we show in these reports is measured against a benchmark. Again, a feature that I find seriously lacking from other backtesting engines, where they can show you your own the performance of your own strategy, but not relative to benchmark. And I find that a benchmark is incredibly useful to get an idea of how the strategy correlates to what happens in the market. And at the bottom, we have a chart that is also pretty standard, even though not all tools use it the same way, which is the underwater curve. So that basically shows you how much you're underwater from the previous high. And so you can see here, 2008, you had big drawdowns for for the 60/40 portfolio that I used here as a benchmark, and much less so for the Mama Bear portfolio. So that's that. So this is pretty standard. Then there's the metrics, and again, this is fairly standard. We're always showing the benchmarks, so this page is no exception. One of the things maybe that's not quite as standard is that we calculate a beta and we calculate that to the benchmark. There's also ways to calculate that to the S&P 500 if that is more your thing. Annual performance is nothing important. Now we come to some features that are slightly different. So the cumulative distribution of returns. So this is basically showing you how the daily returns fluctuate over their probability. But again, this chart is probably not immediately useful to everybody. But what's coming out of it later on is this Monte Carlo chart. It takes a second to calculate, and this is actually something that is unique to TuringTrader that I have developed. So this is a proprietary way of showing this, and no other tool that I'm aware of does this. So this is actually very interesting. Horizontally, you have time, and vertically, you have returns. The big blue is your strategy, and the orange is the benchmark. And here you can see, for example, how what the possible range of outcomes with 90% probabilities of the strategy over time. And you can see here, well, probably you need at least 4 years until you can be 90% sure, 95% sure, because it's single-ended here, that you have positive returns. And you can see that after 25 years, you might think that the strategy will give you somewhere between 5.7 and 14% return, which is at least better than a 60/40. And at the bottom, it gives you a little bit of an idea of how a hypothetical recession might pan out. In the last podcast, live stream, we talked about how these charts are generated. And so if you're interested in what this chart really tells you, then I encourage you to look at the last stream. Yep. But this shows you that the strategy actually recovers faster and has slightly less deep drawdowns, which is, by the way, a significantly more pessimistic picture than what the backtest shows. And I would trust this much more than the equity curve. And the next chart that we have here is rolling returns. This is really, really very helpful. At the top, you see the 12-month rolling returns. And you can see here how the strategy performs relative to the benchmark. And you can see that it's basically having the dips in most of the same places, and that it struggles to outperform its benchmark. And at the bottom, you see how they're tracking to each other. And so what you would want to see here is that you see something that slowly increases. And, well, you can see that the Mama Bear strategy doesn't do that. It did win big in the 2008 recession. It did do some good in the aftermath of 2020. And otherwise, it is slowly trailing its benchmark. And it was trailing by a lot between 2019 and 2020. And so it gives you an idea how your strategy performs relative to the benchmark, which, in my opinion, is one of the most important things to watch out for. And now you can see the target allocation. And this is what I mean when I talked about you have to map the results onto your account. All you see here is the allocation in percent to the various assets, and you see the price, and now you have to calculate how many shares that mean yourself to map it onto your account. Mm-hmm. And then you also see a historical list of allocations, so you can see here when the strategy was trading. You can see here trades on the last day of the month, and what it historically did. And this is all stuff that comes more or less without anything that you need to do. There's also a trade log where you can see how each trade filled. And again, you see this is not expressed, the quantity column here is not expressed in shares, but in percent. And you can see here that most of the time it's replacing whole positions. That's when you see quantities here that are close to 30%. And then there's other days where it's just rebalancing the position a little bit by moving 0.5%, 2%, 1.5% back and forth. So most of this is fairly standard. So the Monte Carlo simulation and the rolling returns are a little more unique. And there's one more tab here, that's the asset momentum. And this is interesting because this is a custom chart. So this is something that is not standard. This is something that I created for the strategy, just to make the point that you can and that this is important. And here, for example, you see the assets that the strategy is trading and the momentum that this strategy has calculated. And you can see that these data are incredibly noisy. There's a lot of wiggling back and forth. And when you see here, for example, this convoluted area here in the middle of 2021, you can see that the various assets are relatively close to each other, and that the noise that is riding on top of the signal is pretty much of the same order of magnitude as the distance between them, which means that in this area, the strategy will not be able to make sound decisions. It's basically random. And this is the type of insights that you gain from being able to create custom charts. This is why I say for serious development, you need to be able to create custom charts. If you can't, how do you gather this insight? It's going to be difficult.
Yeah, I love it. And everything, I think you touched on it there, and you showed it a couple of times. You can drag, everything's responsive, drag and drop. So you can click in and get a little data table that shows up on most of these charts. You can get the actual percentage values and the dates as you look on these different views. And like Felix mentioned, this is a custom chart because I'm not familiar with this one myself, but in some of my strategies, I've built custom views for separating essentially performance between long trades and short trades, right? Where I want to look at almost like the equity curve or the performance or the rolling returns of just my long exposure and then just my short exposure. And that helps just give me some insight as to what's dragging down or what's outperforming or what's going on at different periods. Custom reporting is definitely something you can build out here. It's pretty intuitive and easy. And you can also display tables or the visual graphs with the axes.
Yeah, so all of these templates you can change if you want to. So they're interpreted when the chart is generated. So you can copy them and create your own charts. You can change the colors or anything like that. If coding is not really what you feel super comfortable with, you can also have this in Excel. So and now all I did, I changed the output to Excel. If I now press this report button again, it'll take a little moment, but we should be seeing Excel opening in a second. Now, we have basically exported all these data to Excel. And again, this is driven by templates. So you will find a template that has multiple charts. Here's the custom chart, for example, that I just created. It also appears in Excel. And here's the asset allocation. And so all this stuff basically now also appears in Excel. And now it's down to Visual Basic macros to customize that if you want to.
Yeah, very true.
So it is very easy to customize this and get the information out of it that you want to, and being able to, with basically one click, bring it into Excel, in my opinion, is something that is very useful. I've used it a lot for reporting purposes and for creating stuff where I just wanted to play around with, just to show you one of the things that you can do here, for example, is you can say, hey, I want to just look at the last 3 years here. And now it's filtering this chart and it's adapting the metrics and stuff like that. So, and now it's just up to Excel, and there's a bunch of macros in this sheet, and you can change them all if you want to, if you feel the need to do something different. Okay, good. So so that's that. Let's turn this off again. Good. The next thing I wanted to show you real quick is the optimizer. So the strategy has only one parameter that I've exposed here. A real example would probably have more. So we have the look back period for the momentum. Right now it's set at 105 days, which is when you assume that a trading month has 21 days, then this is a 5 month. So this is what Brian Livingston came up with in his book. And one of the questions would, of course, be, hey, would a different period work better? And well, you can optimize this. And so let's just click this button, which basically says we want to optimize this parameter, and we're going to optimize it between 21 days and 252 days. So this is basically between 1 month and 12 months in steps of 21 days, or the equivalent of 1 month. And you click this button, and now it runs a bunch of simulations and comes back with the result. And now we can sort and find out, hey, which one performed the best? And well, we find that a 3 month or 63 days performed significantly better. So let's have a look at whether this was good. And you can see, yes, performance is better, but you can see that between 2016 and 2020, the results are actually significantly worse. So I'm not sure that you did yourself a favor by doing this. Mm-hmm. And so let's have a look at the results again. Let's look at the fitness value, and let's see which one is the fittest, which is basically a way of judging risk-adjusted returns. And then we find 6 months might be a better choice. And let's have a look at 6 months. And well, I have to say, well, this looks, in my opinion, better than the original at 5 months. But then again, when you test that over 50 years, you might come to a different conclusion. So going from 5 months to 6 months might be just an advantage that out of sample testing doesn't pay off. So it's very easy to do these things. Many tools include optimizers, but not all of them. So and optimizers are always to be taken with a grain of salt. It is very easy to do stupid things with that and basically fool yourself into having created a better strategy while all you did was curve fitting. However, optimizers are also a very useful tool to basically quantify a relationship where you do not know what the relationship between an indicator and position size or whatever might be. So if you want to get a handle on what values might be good here, how sensitive is the strategy to certain inputs, well, that's where an optimizer really becomes necessary. So I believe development without is not really possible, but when you use it, you have to use it mindfully. Yeah. At least there is one here. Good. So this gives you a pretty good idea of what you can do here. Now, the last thing that I wanted to show you is diving a little bit deeper into the code and why having a real language is something that helps. And we'll go much deeper into this in the next stream. So what you see here in the source file is here basically we're developing a class for Livingston's muscular portfolios. And so what we're doing here is we're creating a base class that contains all the strategy logic. How are we going to trade? And it can be controlled by a bunch of parameters. So to implement Mama Bear, we use this class, and now we define which assets we're really trading, and we're defining how we're calculating momentum and what look-back period to use. And this is something where you immediately see the upside of having a real programming language, in this case, an object-oriented programming language that allows you to derive classes from common base classes so that you can create multiple flavors of the same thing, that you can experiment with multiple things. And this is something, when your language doesn't support these things, well, it's getting much harder, right? And now, where I said it is really important to have a debugger, and well, let me show you why. So for example, you want to find out what is the start date and where does this stuff come from and what does this code here do in the beginning. So you can set a breakpoint and you can go back here, and when I click the run button, you will find that this lights up. And now I'm right here, and I can see, well, the start date is somehow defined by the structure algorithm constant. It comes in with the start date, and if I hover over it, it tells me, hey, this came in with January 1st, 2007. And so that's why it's set. And when I step over this, I can see, oh, start date now got assigned this date. So I learned something that I didn't know before. And well, here we're talking about friction, which is basically the modeling of slippage and fees. So what did we assume here? And you can just hover over it and see, oh, we're assuming 0.05%. And you can see these, or we're seeing here, there's a rebalancing day. So what is that? So let's set a breakpoint here and let's run. And now we see, okay, we're here. So let's see if we can find today's date. So this is January 3rd. So this is the first rebalancing. So let's do one more and see where we are now. So now we're on, so it didn't run. Okay, here we are. And the next one is January 31st. And now we can see, let's remove this and go one more. And it runs and it, did I just remove this? Oh yeah, I did. So that was a mistake. I'm sorry for that. And we're probably already done. So nothing more to see. Okay, so let's do this once again. Good. So rebalancing. First on January 3rd. Second on, no, this is the wrong one. Okay, sorry, I'm messing this up. I'm really messing this up. So
yeah,
okay,
you click too fast, remove the breakpoint. But yeah, that's there it is.
So next rebalancing here is on January 31st, and then next rebalancing after that is on February 28th. So you can see, yes, this is a monthly strategy, and just assume it doesn't work the way you want it to. So, for example, you can now step through the code and see line by line what's happening here. So I can see here, for example, on this date, what were the top 3 assets? Well, the top 3 assets, I can look into this, and I can see, well, that's been VNQ, VWO, and VEA. And what were the weights that were assigned, or what was the momentum? I can see all these things here. And this is the stuff that helps to debugging. And if you believe that you can debug a complex strategy, this is a really, really simple strategy, but if you believe you can debug a complex strategy by just printing some values to the console, you probably haven't done this often enough to see how painful this really is. So having a debugger is something that is really crucial for software development, and with TuringTrader, this integrates just easily and nicely. Okay, so I guess this brings me to what I wanted to show. Evan, is there anything else I can show here?
I think you hit on most things. Yeah, I think you said it nicely there. I mean, I spent most of my early developing life with no debugger and printing out every single variable to console, or, trying to figure out how the heck or what the heck my program is doing at certain points where I'm not getting results that I expected. And so, yeah, once you've gone through a few cycles, you've used some other backtesting software, and you've just spent some time in the development world, you realize how necessary it is to have a real-time debugger like that. So, yeah, I think you hit it right on the head there. I think the examples were great. The reporting was great. Yeah. Anything else on your end for this stream?
I don't know. Do we have any questions? Is there anything we can do there?
We don't have any questions. We've got an important comment here from David saying he loves your beard. It's on screen there. So David loves the beard. So you got some fans out there. I
hate shaving. That's the reality of it. But
so he's blowing up your spot a little bit then. So yeah. Other than your grooming and your appearance, that is the only comment question we had come through. So, there's definitely a lot there. This is going to be archived on our website, on YouTube, and probably our website as well. So definitely take the time to revisit some of these topics that we talked about today. Felix covered a lot of ground, and we're going to do some more code walkthroughs in the coming weeks. And especially if you're curious with this, if you do download TuringTrader and you start, getting familiar with it, and you join us in the next session, it would be a nice, kind of collaborative experience where if you open up TuringTrader, we can jump on a live stream for you folks and, maybe help out collaboratively. We actually did just get a question come in from Gary on screen here. So Gary Nielsen's asking, I missed some of this, but did you discuss data sources? And yes, we definitely did, Gary. So you can certainly rewind this a little bit, but TuringTrader and the data sources, super important part here. We talked a lot about Norgate, Tingo, and then constructing and splicing custom data for extended periods where you're essentially looking at maybe a combination or a continuation of ETF data going to mutual fund data, and you can in fact make your own and create your own data source too if you can get a data source that you can't programmatically get in through one of these data feeds. Anything else you want to mention on data, Felix?
No, I guess that's it. I brought up this slide. I don't know if I'm still presenting on that.
Yeah, you are. Yeah, we see it
okay,
there. So yeah, hopefully that's helpful for you, Gary. But yeah, we'll have timestamps, but you can certainly revisit some of what we talked about for data. Super important topic for sure. One that almost deserves its own stream. But yeah, we certainly covered that.
It would certainly be possible to talk an hour about data. It's going to be even more nerdy maybe than this talk. So the target audience shrinks with these topics.
That's right.
But at the same time, those people that attend will know exactly why they attend, because this is actually a topic that gets incredibly painful over time. That's right.
Yep, 100%. Yeah, data is... yeah, I mean, it's everything, really. I mean, it's everything you really need to focus on, because, if you've got lousy data, bad data, if you're not adjusting properly, if you're not looking at all these things, this long list of things, then, all your research and testing and rules kind of go right out the window. So, so yeah, thanks for that question, Gary. And yeah, thanks, Felix, for taking the time today. This was a lot. So appreciate you going through all of this. And we'll be back in a few more weeks with another episode. Links will be in the description. TuringTrader.org is the backtesting engine where you can find source code, read some sampling and examples. V1 and V2 engine. So we talked about both of those, but you can still get both of them. And TuringTrader.com is where you can find Felix's proprietary algorithms and trading systems that you can subscribe for. You can also find them on the Trade Risk now in our trading systems page. You can find them there, and links will be in the description. I think that's it. Anything else, Felix?
No, sounds great. Thank you so much for having me. That was fun. And I'm really looking forward to the next stream, actually. So we'll be going through some simple strategy code line by line, and that might be really, really helpful if you're interested in this and want to get started, how to code up a strategy, what to watch out for, and how to actually really do this.
Yeah, for sure. Well, I think it'll be very tangible, very sort of, we will step through everything and kind of break it down. So if, again, if you're a new programmer, new coder, if you're just getting your feet wet here, it's all C#. That's what we're gonna be looking at, but it will be, should be very helpful. So I'm looking forward to that. So that's it, everybody. Thanks so much for another episode here. Links in the description. Felix, have a great day, and we'll talk soon.
Yeah, thank you so much. Bye-bye.
See you.